Hello and welcome to another update video about Bitcoin. Yeah, pretty slow day, and it's really all about the fibs at the moment. It really is all about the fibs. We've got two scenarios here, one short-term bearish, one short-term bullish. The situation hasn't really changed. I just want to explain again that it's not so much about the micro count at the moment. It's really about the Fibonacci levels. Got very complex corrections. I think, buying pressure is coming back in. We can see that because the market is forming or is trying to form, a higher low. We've got a slightly higher high compared to the previous one. So this one was a slightly higher high, the high on Monday, the 6th of May. However, we have not managed to break above this swing high from the 23rd of April. But nevertheless, buyers are coming back in. You see that because we have an impulse to the upside. The move down, however, yeah, I don't know, it looks a bit ambiguous to me. Therefore, the Fibonacci levels are really key at the moment. We need to be observing them. In video yesterday, I presented you with various Fibonacci levels that are important to be watched. Now, the market is still above support, even above the smallest micro support, and still below resistance. So there isn't really any change. However, things are going to get interesting once we get a move, and possibly we're going to see a move later today towards the end of the weekly candle. So obviously I'm talking about Sunday. It depends on your time zone, but we might see a bit of a move there as we are approaching the end of the day, the end of the trading week, really. So let's take a look at the short-term bullish, short-term bearish scenarios. First of all, the main thesis is that we are still in a bullish market. Okay, so in all likelihood, we should see a continuation of the bull market. Now I have to change my perspective below 50,700. That is when my scenario would break. Until then, everything that happens in that larger orange support zone could be considered noise. However, I am actively tracking microstructures to identify possible trend reversals and also opportunities on the smaller time frames. You can see that in the white count, we're tracking a W, X, Y structure. In the Y wave, we have an A, B, C. I've got the B wave here as a running flat structure at the moment. And then we could now come down in wave C. So basically W, X, Y, A, B, C. The C wave to the downside should be a 5-wave move. If it is one, then it's likely going to be an ending diagonal. Either way, it could also be the short-term bullish count, which is yellow. But there is one key level that distinguishes between the two, and that's the 58,360 level, which is the 78.6 retrace level of this rally that started on the 1st of May. So you can see also the short-term bullish count, which is the yellow one, because we had 5 waves up. It generally leaves the door open for higher prices as long as we're holding relevant support levels. And as I said, the relevant support is at 58,360. Can I promise you it's holding? No, absolutely not, especially the quite impulsive decline here. Yeah, it doesn't look great, but still we're holding above support. At the moment, even in the yellow count, we could say, okay, possibly the move down was wave W, X wave, and we're now in the Y wave or something, which is another ABC. I presented you with resistance. That's not broken yet. So as long as we stay below 62,800, which is the 78.6 retracement level of this decline that started on Friday, and we're forming a small bear flag here as well. Well, as long as that's the case, downside pressure should remain high, and it's likely to see at least one more low in the yellow count or even something more bearish, but I can only confirm that if there is a sustained break below 58,360. In that case, the price should move down into the lower yellow box, which is just the lower support area, just the target projection area for the white count between 53,833 and 55,377. So somewhere in that region around, you could say just broadly 54 to 55K. If there is another low and if the yellow count breaks, well, that is where I would ideally like to see the C wave of Y of 4 finish in the white count. I don't really want to see it go down much lower. the downtrend is slowing down overall, but I don't have those clear completion signals, okay, that the correction actually is over. So it continues to be a test of patience. And really, what would be the first indication that some kind of a low is in place here? Obviously, that would open all sorts of other questions, but at least we could track that. Well, it is, as I said, a break above resistance, but even more important here, that last swing high at 63,500 appears to be a very relevant resistance or structural resistance level, actually invalidation point for that white move to the downside for the microstructure, the bearish one. So that's something that we need to pay attention to. Unfortunately, there isn't much more to say about this, so I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye bye.